Hey, Brad Niccum Nest Mortgage Group here. Hope everybody had a great weekend. I know my wife and I did. We got to go up to Michigan to visit some friends and check out Lake Erie. Really beautiful up there. It's hard to believe that we're in the last week of August already. I am not ready for summer to be over. It's just gone way too fast, and I'm not looking forward to cold weather. So here's to a warm fall. So let's talk about rates real quick. The bond 10-year T-bill has moved up above 2.8 where it was for so long. It's actually above the 3.1 number. I posted a chart in here that shows where it was the highest back 13th and 14th of June. That is the time frame that rates kind of jumped up the most. But now you can see where they're at now. Rates are still in the high fives, low sixes, depending on loan type, credit score, down payment, etc. You know, those little changes. Government loans still are the lowest rates, but of course you've got the other fees and the different mortgage insurances and funding fees. So you got to weigh it out to see which ones are the best. I've seen an article today that just reinforced house prices and that we're not in 2008. I know we all hear it and say it every day, but then someone goes home and watches the news and hears the news say, oh, the market's going to crash, or I'm going to wait to buy a house till it crashes. So here's a great read that just shows that home prices are up 53% year over year. That's pretty amazing. Even though some of the prices have slowed, they definitely aren't going backwards. Jerome Powell, he did double down on his vow to crush inflation in his talk that he had on Friday, if you missed that, really talking about how they're going to work hard on getting inflation down to 2%. This is a very stern speech with a lot of warnings. Most of economists still believe we're going to see a 0.75 increase in the federal fund rate in September. We just have to wait and see how that market reacts and see what they actually do. I believe as well we'll see a 0.75. Interest rates are probably react favorable to that because we'll see inflation start to slow. Another note that's starting to come up a little bit, if you have a customer with a federal school loan, it still has to be included in their debt to income ratio. This announcement of a partial school loan forgiveness program has not passed anything yet, so it still needs to be included until something does actually change. On school loans that are in deferral, 1% the total balance due is calculated for the payment on all Fannie Mae loans, and a 0.5% of all balance due is calculated on a Freddie Mac, FHA, VA, or USDA. So they give you a break. About half the payment is required. It's a little easier to qualify for those loans. Hey, we're still closing loans in 24 hours. Closing loans in less than 30 days, underwriting in 24 hours, clearing conditions in 24 hours. If you have a buyer that needs to go fast and get this deal done, we can do it. Just did one 9 days from application to close with an appraisal waiver. Just did one 16 days application to close with a appraisal, and 20 days application to close on an FHA loan with appraisal. So we can get them done quickly. Still having a lot of luck with appraisal waivers before the buyer puts in the offer. So if you're not doing those, give us a call so we can talk about how to do that. And 1 hour pre-approval, 7 days a week. So still working all the time answering the phone. So if you have a question or a borrower needs to get pre-approved or get done quickly, feel free to give me a call, 317-538-9825. Have a great week.